Even the rich, though, haven't been able to move the needle when it comes to retail sales. If you adjust for inflation, you can see there. The yellow line is what we report all the time, but the blue line is what's really happening. Hasn't really moved that much. I want to bring in Osaic, Chief Market Strategist Phil Blancato. Phil, you know, I thought it was interesting with this McDonald's thing yesterday, in part because in the last 10 years, no fast food places raised their prices more. So
100%.
They're 100%. Actual inflation is up 31%. So they're up 200% above
Never
inflation.
let a crisis go to waste, buddy.
I mean, so they got away with a lot here. And now they're saying, well, you know, I think they added more to the value meal or whatever. People are stretched. I mean, this just shows you this is not a new phenomenon. People have been stretched for some time.
The excitement of the last 10 years is 8 out of 10 years, the level of wages were above the rate of inflation, but not enough to accept a 50 to 100% increase in food. The two things that post-pandemic that are still hard to swallow is food and energy in your home. And we just haven't gotten past that. That's why it's a bifurcated economy. Don't forget, 70% of America's wealth is people over the age of 65. What are they doing? Buying first-class trips on an airplane where the rest of the folks just aren't. They're just getting by.
Let's talk about that, because even if you try to keep up with the Joneses, that's kind of changes. FOMO buying, fear of missing out. Okay, what can I do in the moment? Now, it wasn't long ago when luxury items were up there, right? I think when the stimmies are coming out, Louis Vuitton, the CEO, became the richest person in the world. Now it's about restaurants and travel. And this is an area that you focus on from an investment theme.
I do. And the reality is those numbers, while they've softened a bit in July, don't forget some of this stuff is seasonality. What do we do in the summer? We travel, we dine out. What do we do in the fall? We buy stuff for back to school. What do we do at the end of the year? We buy those luxury items. So be careful of seasonality. The reality is the dollar went down by 10%.
Right.
So stuff you used to buy from overseas is now more expensive. So how do you pivot? You pivot to those areas, because even though McDonald's is more expensive, we're seeing actually restaurant and travel outside of your home, outside of your area, still be quite strong.
I want to ask you, because I see you made a comment about the de minimis.
Has me very worried.
Okay, why does this have you worried?
This is the one thing about the organization, the Trump organization, which I just don't understand. A lot of folks at that same number, there's 100 million people who make less than $100,000 a year, less than $75,000 a year. They depend on cheap goods from China. We just do. We're built. We're never going to make plastics in the United States again. So when you put that tariff on stuff under 800, when you go to buy a new pair of sneakers, it's more expensive. This has me worried. This is something that I think you need to look at and make sure they got this right, because you're going to put pressure on the folks who are already feeling pressure. The folks who could afford it, no big deal. Back to your McDonald's analogy. But for everybody else, this one hurts. I don't agree with it.
And a report out today.
It's not enough money, by the way.
Holiday shopping is going to be down 5% this year, first time since 2020.
Yes.
You know, listen. I'd like to see us save more as a society, to be quite frank with you. Anyway, you know, not to sound cold about it, but I think that's one of the areas would be great if we did. But let's shift to some of your ideas here. I want to start with Johnson & Johnson. Sort of a staid old name, goes back to the 1800s. Why do you like it?
Folks, we're in September. I want you to take some profits. I want you to sell a little NVIDIA. I want you to sell a little Apple. Maybe you had a little Google pop today. Why I want to buy this name? You get a wonderful 3% dividend. Their cardiovascular unit and their drug innovation unit are blowing out. They have a pipeline of drugs that I think is very impressive. So you'll get the best of both worlds. A steady climb in value, but a big fat dividend. Why? You want to have balance in your portfolio. You don't want to just be betting on tech and AI. And I get it. We've talked about some great names on the show, but this is your chance to pivot on weakness, and I think that's a great name.
Netflix is a name, though, that's made a hell of a move over a long period of time. It doesn't feel stretched to you at all?
It doesn't, because the reality is they're going to go from $45 billion in revenue to $50 billion in revenue, and their global footprint is blowing out.
Right.
It's one thing to try and get U.S. market. That's a different ballgame. They won the U.S. market enough. They're not going to get more. But now the global market's what they're taking on, and they're winning that. So you look at it, a company, again, a bit like a Johnson & Johnson. I think it's a stable name.
You got GE. GE was broken up into 3 companies. This is now, what GE is this? Like, in other words, there's the healthcare, there's the one that does the turbines.
This is the manufacturing. Here's why I like this one. You know, when you hear the president come out and say, we're going to give Ukraine some money, or whoever's going to give Ukraine money, they don't actually hand them dollars. They give the money to GE or another defense-type company, because they're partially defense. Right. They make stuff, and they give it to Ukraine. So you look at their defense unit, it's up between 7 to 10% just on pure growth in revenue. Then you add in, guess what, planes. We haven't made a lot of planes post-pandemic. You look at their engine building for planes and the equipment for planes, up 20%. So what are you buying here? You're buying a company that represents all the money on defense and where we're going with global travel. I think that's a bellwether name. And to your point, they finally capitulated.
Before I let you go, jobs report, the Fed, what are you looking for?
Honestly, I think, listen, everybody, you're going to tell me I'm wrong. I don't think the Fed cuts. I'm going to be that
in
aggressive.
September.
I don't think they do, unless we see a number come out on Friday that really means weakness. But here's the story. It's very important, everybody. Please listen to me. If they cut because of a weaker job market, the market gets crushed. If they're cutting because of softer inflation, the market rallies. So be careful the cut we get.
Right.
If it's because of weaker jobs, it's a very different narrative. We're going to be talking about very volatile
Historically, we have
markets.
seen that happen.
Exactly.
Good stuff.
Pleasure.
Appreciate
Thank you,
it.
buddy.